How I catch winning stocks coming out of a correction. Today we look at 5 important checkpoints before buying, and then we dive into the charts. So make sure you stay till the very end, guys. So every stock has an initial momentum wave. That's where everybody gets excited. The stock starts making headlines, analysts raise price targets, and retail investors begin chasing performance. But many investors end up buying after most of the move has already happened. And then comes the correction. Profit-taking starts, short-term traders take money off the table, and the stock digests its previous gains. And that's exactly the phase I like to watch, because while most investors see weakness, I see opportunity. I'm not looking for the first momentum wave. Most of the time, I intentionally let that move go. What I'm looking for is the second or third momentum wave. The move that starts after a healthy correction, because that's often where you can find a much better risk-reward ratio. The trend is still intact. The fundamentals are still strong, but now you're not longer chasing. That's a very important point. And today I'm going to show you exactly how I identify these opportunities before putting my money to work. I walk you through the 5 important checkpoints I use before buying a stock, and after that we jump into the charts and take a look at some real-world examples. Great stocks are not always great buys. A great company and a great investment are not always the same thing. Timing matters. You can buy an amazing company at a terrible price, or you can just buy the same company during a healthy correction and dramatically improve your risk-reward ratio. We are not trying to predict every market move. We are simply trying to improve the probabilities in our favor. So let's see the checkpoints, and after that, the charts, guys. Checkpoint number 1. Do your due diligence. Before I even look at a chart, I want to know whether the business or the company deserves my money or not. Have the least 3 or 4 earnings reports been good or strong? Are revenues growing? Are margins improving? If they're a new product launch, strategic partnerships, major contracts, or new growth drivers? The charts tell me when to buy, but fundamentals tell me what to buy. Checkpoint number 2. The market must be working with you. I always want the broader markets to support my trade. I look at the S&P 500 and the Nasdaq, and the market environment should be bullish or at least improving. Because even the strongest stocks struggle when the entire market is under pressure. And right now, checkpoint number 3. The stock must still be in an uptrend. I'm not looking for broken stocks. I'm looking for strong stocks that are temporarily resting or respectively correcting. And the stock should be in a healthy trend. Checkpoint number 4. Healthy corrections create opportunity. So a strong trend often corrects around 38%. Average trends often correct around 50%. And those are generally healthy pullbacks. We're gonna see that later in the charts for you guys. So the stock is simply digesting previous gains and shaking out weak hands. And right now, checkpoint number 5. Wait for a turnaround signal. I don't buy simply because the stock reaches a Fibonacci level. That's pretty interesting, but it's not all. I want a confirmation. A double bottom or a bullish engulfing candle connected with a higher low, a breakout above a resistance level, or just an important support level holding. etc. You named it. There are many, many turnaround signals. And right now, let's dive into the charts to see some examples, guys. Now we dive into the chart and just from the beginning about chart patterns, candlestick patterns, volume profile, turnaround signals, etc., etc. You named it. We're gonna make a separate video to dive completely deep into this topic. So don't worry, just subscribe. You don't gonna miss it. So let's talk about trading out of the correction. So we are right now in AMD, pretty impressive. So I'll make it a little bit bigger for you guys. So AMD was over here in a downtrend, advanced micro devices, and here we got the first turnaround signal, the first momentum wave, higher highs over here. So this was the first momentum move, though not a move that I want to play normally. So, but over here, if we dive deeper into it, we got a correction, and this move from down here over here is way over 20%. It looks pretty tiny right now because AMD made some big moves lately, but it was more than 20%. So we made a correction over here, and this one here with a pretty nice breakout segment, a signal with a bullish W or out of the correction. What you can do is, if you want even a better entry, you can dive into a smaller time frame like the hourly chart to get even a deeper look into it to get even better entries. But for a beginner, I would recommend stay in the daily chart. So over here, we got the momentum move, the first momentum wave correction, and here we got a pretty nice entry, and you see it already from here up here. It was a pretty nice move, and depends on your position and stop management, you would take away a big chunk about this move. So the next opportunity we had over here, so we had this momentum move over here, then we got the next correction over here. So there we got the next opportunity to enter into AMD. So we got the momentum move and correction. And over here, we got like a double bottom bullish W over here. You could get a better entry if you dive into the 1 hour chart, but I wouldn't recommend it for beginners. So the daily chart is more than enough for a good investment. So and over here, you would get a really nice entry, and yeah, it struggles a little bit. And then we see it over here. We made a freaking big up move here, gap up, whatever. And it was an amazing move. And we have a third one. It's not like it was a little bit more like a consolidation phase than a correction. It was over here. So on this time, it was making like a double top. And this was a strong support level. Many times tested. So in a smaller time frame, you got a pretty good entry point over here. And later over here, you got a good entry point again. Uh, in the smaller time frame, but if you want to play it safe in the daily chart here, the breakout over this level, you would be into the market over here at 223, and right now you have to make it even smaller. You would have a freaking amazing move. So you see it over here. So depends on your position and money management. You would make a lot of money. So that's example number one. Right now we jump into example number two. Right now we are in Palantir PLTR, an amazing stock right now. So let's begin over here when I was still not sure about that stock. So over here we got the first momentum wave over here. It was difficult to entry over here. Then it made the next momentum wave, the second wave. I couldn't catch this wave, and then let me pull it down a little bit. It made a really nice correction over here, and it made a V bottom. It was perfectly to enter. I entered it here because it was January 2025 with my personal bigger account and my managed accounts, because over here the The errors are from my $1 million challenge. I only display my $1 million challenge in trading view, so my other accounts are going to trade in trader workstation. But anyway, I entered here after this correction here, V bottom and some more signals, and we got a great move up here. It was struggling a little bit, and then it made a pretty big breakout with the earnings, and it was a freaking amazing move. And yeah, went out of this move here. And over here, you can see there's no examples, but with a $1 million challenge, it was back in April 2025. You remember the Trump tariffs. It dropped a lot. So this was a good entry for me. V bottom here. I bought it here. And you see the red arrow. I exit here and I entered again over here. And it made the next freaking move here. And I exit over here. So well, right now, image again, but the real example is basically only this one. This one here is a pretty nice move. And this one here was a strong correction, but it was in April 2025. It was more like a small crash because of the Trump tariffs. It was not like a correction. So the only example here is above over here and the breakout, and then we got an amazing move. And right now, let's go to the last stock. We're in the third stock, the last example. So it's Coinbase coin. And so here we got a phase where Coinbase was struggling, but over here we got a big first momentum move. Barely impossible to enter the first momentum move out of this market phase over here. So, but it made new highs, impressive move up here, first momentum move. Correction was a little bit struggling over here, and over here you got a pretty good entry above the green line. The breakout line here was a breakout line out of the correction. You got a pretty nice entry over here, and like you can see, you got an amazing move up here. Then it made the next correction over here, and we got here the next turnaround signal and a breakout over here. And if I tighten it up a little bit, you see it was also a freaking amazing move over here, but it was before 2025. I started my $1 million challenge in 2025. You don't see the arrows here. So right now I'm in Coinbase again, but it doesn't has anything to do with the actual market phase. So guys, these are the examples. Back to the video. Why I love buying the recovery phase. The reason I like buying after a healthy correction is because that's where the next momentum move often begins. The first move created excitement. The correction removed excess optimism. Weak hands got shaken down and the stock rested. Now it's time for fresh new buyers. This is where many of the strongest moves starts. I want to participate in the next leg higher, the next momentum wave, the next institutional accumulation phase. And the conclusion of all of this, before you buy your next stock, ask yourself these 5 questions. Did I do my due diligence? Is the overall market bullish? Is the stock still in a healthy uptrend? Is the correction healthy? And do I have a real turnaround signal? If you can answer yes to all the 5, you have already improved your odds dramatically. The difference between a good investor and a great investor is often not what they buy, it's when they buy it. So guys, don't forget to subscribe if you want to be ahead of the average retail investor. Guys, peace out. Sasha.